Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the on-chain risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. There's several different ways where we try to decipher what is the current risk in the cryptoverse. And the three main ways that I normally talk about, there is the price risk, there is the on-chain risk, and there is the social risk. And all three of them give you a slightly different perspective of the cryptoverse. We previously talked about the social risk just a few days ago, and I thought, why not talk a little bit about the on chain risk? Now, if you look at the components of the on chain risk, you can see which ones are currently lower and which ones are currently higher. For instance, the pure multiple risk is kind of in between 0.588. It's not super extreme in either direction. And transaction fees are actually kind of low right now. The transaction fee risk is actually relatively low, but some of them are a little bit more elevated, right? Like the market value to realize value risk is a little bit more elevated. So let's go take a look. So what we're going to do is we're going to expand the on-chain risk. And note, it goes between 0 to 1. 0 is low risk, 1 is high risk. And you can see that in late 2022, it went to pretty low risk. And back then, that was when it was a pretty good idea to DCA into Bitcoin, especially if you didn't have any, right? Now on ICC Premium, I did mention I was buying Bitcoin back then in late 2022 with US dollars because a lot of these risk metrics were relatively low. Ever since then, the on-chain risk has been putting in higher lows. There's a low in August 2023 and then another low here in September of 2024. So the on-chain risk continues to slowly go up. There was also, and we talked about this previously back in June of 2019 when gold broke out and USDT dominance hit its trend line. That marked a sort of a mid-cycle top for Bitcoin, just like it did here in March of 2024. So a lot of similarities to a lot of this stuff. So I would keep this chart in mind. Um, when navigating the cryptoverse. Now, if we break these down into each individual component, there is the MVRV Z score risk, which is, around zero point 0.6 or so. It's not too heated, but it's also not that low either. There is the pure multiple risk, also at zero point 0.6. The MVRV risk, which is kind of high. You know, this is one, it's already at zero point 0.8. And normally, market cycle tops occur, in the zero point 0.9 to 1 risk level for this. So that one's one that is worthwhile to kind of keep an eye on because it is getting a little heated, just kind of like it did over here in March 2024. It got heated. The minor cap to thermo cap risk is starting to get elevated again. The market cap to thermo cap risk, a little over 0.6 or so. Terminal price risk 0.6 to 0.7, and there's a couple others that I'm not actually using in the calculation. You can see the R HODL ratio risk is currently going up pretty quickly. It's actually reaching the levels that sort of reached last cycle, but because this risk didn't give as good of a signal last cycle, it's not included in the on-chain risk calculation. And then there's also the supply and profit risk, which is pretty high right now, right? But the reason why this one isn't really used is because, you know, a lot of times it'll just say it's at one risk when everyone's in profit, but there's a lot of times when that's just simply the case. So those two are turned off. So if you show all of them, it looks like this. But then if you average them out, it looks like that. If you turn on the R HODL risk and add it in, it looks like that. If you turn it off, it goes back to that. If you add in the supply and profit and loss, it goes up a little bit. If you add them both in, that's what it looks like. So transaction fees, if you turn those off, it goes up a little. Transaction fees are a little interesting to me right now because I don't look at them that much because I don't frankly really care that much about them. But if you look at transaction fees, there's been several spikes in a lot of these prior runs. Like there was one in May of 2023, and then there was one here in December of 2023. But you can also see it was trending up during that time. And there was also a spike here in April 2024. Um, I guess what's kind of, and let's switch to a log scale. I guess it's just a little interesting because, last year around this time, when the price of Bitcoin broke out, transaction fees started going up. Um, and this time they haven't really. I mean, I don't know if they're waiting, if they will start to go up, but it's a little interesting to me that they're not really following along in the same way as they did last year. But I guess one counterpoint is that um, even when it did have these spikes, there were some pullbacks here, especially going into the current time, right? Sort of late November. So I guess the question is in December, will it spike again? It's only a week away, so perhaps worth watching transaction fees. It's just kind of interesting that it's normally they just sort of slowly, especially throughout the cycle, they generally trend higher, and we're not really seeing that. They've been trending lower. I guess one counterpoint is sort of the ordinal stuff, right? The ordinal stuff maybe arguably threw the stuff out of whack and perhaps makes it not as useful as a metric anymore. But anyways, that's your on-chain risk. And one of the things you could do is, I often say, just pick a risk metric and stick with that. If you pick this one, then, you could simply buy Bitcoin whenever it goes below 0.2 risk and then just forget about it for a few years until it goes maybe back above 0.8 or something. It's just one idea. At the end of the day, no one knows where the market's going to go. And the great thing about risk metrics is that you don't have to know where the market's going to go. You just have to be able to react based on where the market does go. So when it goes to low risk levels, that means buying. When it goes to high risk levels, it means selling. And not overcomplicating it. It's easy to overcomplicate things. There's always something in the news to worry about. And even on this channel, I mean, I talk about things that are worthwhile of our attention, but as I always say, it's all just dubious speculation. All I do is I DCA at low enough risk levels and I DCA out at high enough risk levels. And I don't think the market needs to be any more complicated than that. The way to be successful in the market is to have a plan and stick to it no matter what, not to let intraday market movements tell you what to do. Because if you do that, then you'll probably get chewed up and eaten alive by the market. And then you'll wonder, what happened? Like, where did you go wrong? Whereas if you just had a strategy and you stuck to it, you'd probably be doing much better off. I think a lot of times people will come up with a strategy during times like this when the market is starting to heat up, and they say they'll stick to it, but then the next time the market sells off, they decide not to stick to it. And I think that's the hard part is within crypto, when you identify a strategy, you have to stick to it long term, I think, in order to be successful. If you just decide to let the emotions rule, that's where you can have some hiccups. But anyways, guys, that'll wrap it up for the video. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. You can get access to this chart. I'll see you guys next time. Bye.